As oil prices leap even higher on worries of a widening war with Iran, here to talk more about what it means at the pump is Tyler Schipper, who is an associate professor of economics down at the University of St. Thomas in St. Paul. Professor Schipper, thank you for your time today. Let's first talk short term. For our viewers here at home in the Northland, from your perspective, what is the most realistic outcome we'll be seeing in the coming days when it comes to gas prices?
Yeah, thanks for having me. Lots of scary headlines out there with respect to gas prices, oil ships on fire, and certainly I think that people should be prepared for some short-term increases in oil prices, and gasoline at the pump, but also not to get too carried away. There's a lot of uncertainty here. There's a lot of unpredictability, and so not to worry necessarily about shortages at the gas pump, but still expect that gas prices were already edging upwards, and they'll probably continue that direction over the next few days.
So when it comes to these higher prices that we're currently seeing, it's more about markets reacting to uncertainty. Would that be your perspective out there?
Absolutely. And there's actually like three pieces that have happened here. One was that oil prices were going up in advance of anything happening in Iran. So we've already seen an oil rally that's been pushing up prices at the pump. Then there was an expectations game that markets were expecting something to happen in Iran, which pushed oil prices up a little bit more. And then there's the events of the last few days that pushed them up a little bit more after that. And it doesn't necessarily mean that oil's not getting to the United States, for instance, or that we're going to see huge price increases. It's that market traders are trying to figure out how big of a deal this is, that uncertainty's there, and they're pricing that uncertainty into oil prices.
And when we talk about higher oil prices, who are the winners and losers in this situation? Who feels the most pain, and historically, actually, which sectors tend to benefit from these situations?
A lot of this depends on how long it goes on, because there's a lot of energy-intensive sectors. Think about the airline industry, for instance, that they often buy their gasoline on futures contracts, so they have a cushion there before they have to raise prices. But if there's continued uncertainty and continued conflict in the Middle East, the longer that goes on, the more likely we are to start to see price increases in things like cruise ships or airlines or even manufacturing processes that can be energy intensive. Unfortunately, the winners in the short term are probably big oil producers in the United States and other countries that aren't subject to this conflict, that higher oil prices mean that they get a higher price for their production here. And if you work for one of those oil companies, great. For the rest of us that just have to pay higher prices at the pump, we'd rather be those winners than big oil.
Professor Tyler Schipper with the University of St. Thomas. Professor, really appreciate your time today.
Thanks for having me.